Hi everybody, this is Dennis Wilborn, founder of Active Trend Trading. Thank you for taking the time to watch this free video that we do every week. It is a video where we cover the markets. We also have oftentimes have some trades that we might be setting up that you might want to take. But I want to ask you, before you leave the page, as you watch the video, just give us a real quick thumbs up and share the content with somebody else. Leave us a comment. We'd really appreciate that. So aloha, God bless, and mahalo. Hey, good afternoon, everybody. This is Dennis with the Active Trend Traders. I want to welcome you to today's session of how to make money trading stocks, options, and ETFs. Just a real quick introduction. We're right in the throes of earnings season, and our strategy number 2 with our strategic compounding has been working really well. Had some really good trades on 4 entities this week that had earnings, and we'll be sharing that a little bit with everybody in the premium session, which starts at the top of the next hour. But for today, we've got some really good stuff to cover. Hey, please feel free to share this video with anyone you choose. I mean, just get it out there. We love to have more active trend traders. And, those people who are interested in possibly learning how to turn a small amount of money into a large amount of money. I think that's what we're doing with strategy number 2. And we'll cover that in the webinar today. So with no further ado, let's get on with the presentation. Hey, Michael, how are you? Glad to see you. I'll put you online here shortly. I've got to get... There we go. Okay. Hello, everybody. This is Dennis Wilborn with the Active Trend Traders. Welcome to How to Make Money Trading Stocks, Options, ETFs. All the materials that we do present. I don't think I'm sharing. I'm not sharing, but I will. I am recording, but I'm not sharing. So I'm going to turn my video off. There we go. Okay, let's get going again. This is Dennis Wilborn with the Active Trend Traders. Welcome to How to Make Money Trading Stocks, Options, ETFs. All the materials that we do, all the materials that we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Remember, your job as a trader is wait for the best possible opportunities and then basically take advantage of those. But we have to sit and wait rather than trying to force the new trades on a daily basis. The objective of this webinar is just to provide timely, actionable intel review at the end of the week, seeking to clarify, simplify market decisions. Right now, I'm waiting for pullbacks, and so trade the pullbacks until they stop working. I mean, that's basically the essence of what we're trying to do. We're just a stone's throw away from, SPX making all-time highs. The NASDAQ has already done that. So once we hit it, what's going to happen then? Are we going to just fall back to earth? Specifically, we don't know. But what we would like to do is, what about the Fed? Fed meets next week. We are right in the middle of all the earnings season, earnings going on. Lots of really crazy stuff going on. I'm going to point out a earnings potential trade for everybody. That if you want to jump on board, this is great. But it's on this growth stock called Roku. There's a couple of opportunities either for buying buying a couple of call options that expire the week of May 10th. Because earnings on Roku, I believe, is around May 7th or something like that. We'll take a look at that right now as we move forward. I want to check one thing before we get any further down the pike here. I've got a trade going on in our buddy Amazon, and I'd like to see that come through to the upside. Oh, cool. And so Eric's stuff. Hey, I'm going to do one thing before we jump into the individual charts And that's basically, I'm going to let our friend from, if I can find the participants, where are you at there, Mike? Oh, there you are. Hey, Mike, I would like to have you just say hi.
Hello, can you hear me?
Yeah, there you go.
Okay,
and what's going on with the European market, man?
Great to see you again. What's going on with the European market? Well, they reversed greatly. I mean, they have been in a pretty bad bear mode, I think starting mid or even beginning of last year.
Yeah.
And now I think actually every market turned. And so as we know, I mean, the global markets, they correlate greatly.
Right.
And so I think as long as the positive general mood continues, there is a lot of potential to catch up for Europe.
Okay, so another European. So remind me, what ETF are you looking at for the European market?
Well, actually, the most liquid is EFA. That's basically all Western markets except US and Canada, I think.
And so, well, we'll take a look at that as we're moving on. I've got, like I said, I've got a couple of stocks I want to show everybody today. But EFA, I'll take a look at that before we close. Good to talk to you. Hey, let's exchange email this past week. I just wanted to get some more detail on what exactly is going on in with you in the and how you're trading and what you're trading. Thanks for joining us today. Yeah, and so let's get over here. Hey, here's where we're sitting as of the 9 o'clock this morning. We're up about 9% with the active trend trading system. The Dow's up 13%. The NASDAQ has just been going on like a wild man or a wild woman, and it's up over 20% for the year. Note what's going on here. NASDAQ 100 has, in fact, breached and broke through the all-time high. So it's up about 1.24 from the all-time high, 23% for the year. Now, that does not include the little bit of spurt it did right after Christmas last year, but who would have guessed that this is the kind of market we were going to getting into this year? Everybody's expecting the market to kind of, fold back, crash, and I think that some of the people, as we get, what's happening is as the market gets up close to old resistance or potential new resistance, the shorts are coming in and shorting what they expect to be a pullback, a strong pullback, and in fact it's turning out to not be a strong pullback and is actually pushing, and so then those shorts, as they cover their shorts, are feeding the fire for the rally to continue in the U.S. equities market. So as we said, absolutely crazy. We've been out. Our active trend trading strategies 1, 2, and 3. Cash flow and profits for the month of April so far, a little bit over $3,900. So we're going to be looking at some charts here, and kind of like this old F18, this F18 right here above the carrier. You got to launch sometimes and go straight up, and that's exactly what the markets have been doing. Here's one of the strategies we're working on, and I'm really pleased with this strategy. And if you're a premium member, I hope that you're being able to take advantage of what we're doing with it's an option strategy, but it's aimed at, I got to thinking, and strategy 2 we've had around for a while, but we didn't really take in consideration strategic compounding. Compounding is an art that is utilized oftentimes a long time ago, back when the savings and loans were paying 8, 9, 6, 7, 8, 9%, and people could basically roll their money over year after year after year after year and grow their account. That's a lot of the place where the rule of 72 came about, is how quick can you double your money? Well, some of the new tools that were available, and again, we're making this offering, for premium members, is some of the new offerings with the weekly options and some of the leverage ETFs allow us to actually, hey, what happens if you compound, but you compound on a weekly basis? And that's exactly what we're doing here. Our target is to compound the amount of money we have by 5% on a weekly basis. We started the year with $10,000 in strategy 2, and as you can see, we're up 71%. And again, 71%. And next week, when we get going, my target is $857. That's 5%. That's our target for growth going into next week. A couple of other things we're keeping an eyeball on. Nat gas. We keep expecting nat gas to get a bump and start to run it up. It's not happening yet, but it may. We're going to be covering that in the final hour. It looks like it may be trying to turn around. NASDAQ tends to just kind of wallow around in April. You get your tax, April 15th goes, and then you start getting on this slightly upward path through the end of the year with NASDAQ. We'll see if that keeps going that way, because you got to remember, we've had 3 months, well, almost 4 months now, where the NASDAQ has just been outperforming everything. Russell, similar type situation. Russell has been the lagger, but oftentimes Russell can lead on the rest of the way up, or it's the canary in the coal mine that gives you a warning that things are going to roll over and fall back the other way. Gold futures, typically April through around August are kind of slack, and that's where we are right now. There's some bounces up and down. If the market does in fact pull back, you can expect gold to run higher. That's just the moving to a transition into a more safe commodity. But anyway, gold tends to get its bid around the July-August timeframe, and then runs through the end of the year, and then does another little spurt in the November timeframe, which is absolutely excellent. Crude oil. Crude in April tends to continue to move up, may do a little bit of consolidation. And crude, of all the entities that we follow, I think crude is coming closest to following the seasonal chart this year, just like it did last year. So if you are if you'd like to learn more about active trend trading, or just learn a little bit more about trading, you can join us for our monthly BAM webinar meetings. The next one is May 11th, and we're going to be talking about how to trade less and make more. You can find me here's my email address. If you want to find out about how to become an active trend trader, you can email me there. And then we do our premium training every Wednesday, technical training for the week and more. And so recently, my son Brandon has joined the active trend trading team, or rejoined. He was on the team right after he graduated with college. He got out and started a career, did all kinds of really cool stuff, and now he is back in the fold helping Dad with the active trend trader. He primarily is the main guy who does the market action points, and a really good technician. It's so funny. In the 7th grade, he started trading stocks. They started a stock, and so he's been at this quite a while. And like I said, he is an excellent technician. And then, of course, here's my lovely wife, Michelle. We just celebrated 45 years of wonderful marriage this past week. And then here's Brandon and his lovely wife, Sharon, and our 2 grandkids. Now, you're probably going, Dennis, would you look at some charts? Thank you, Eric. Appreciate that. And I'm going to go, yes, I'm going to look at some charts right this moment in time. Let's go to the weekly daily on the S&P. As you can see, the spiders is just basically has not broken up. There's a resistance zone here at the 293.94 level. And it's just hanging right there. Now, if we break up through this, what's our upside target? Let's just put just do a real quick Fibonacci to find out what our potential upside target is. And we'll use and this is just prior to the year. We've got that, okay. And Let's go there. Let's go there. Come on. Well, shoot, guys, I'm not getting the. Make that easier. I'm trying to grab this one right here. The darn thing is not grabbing it. Anyway, give you an idea of what type of upside potential we're looking at. There we go. There we go. And so if we break by through the 293 level, our immediate upside target for the S&P or the spiders is up here at 310. So if you want to take a note, say $310, that's your upside target, the initial upside target on a break. Because oftentimes if you break the 100% retracement, which we're really close to doing, you'll get a run on up into the 1272 extension. And that's fairly standard, and that's what traders tend to push things towards. And so that's what we're looking at with the spiders. Let's go on over to IWM. IWM. The Russell, as you can see, this is the Russell ETF, IWM. If we break out past this 195 level, then that brings the 170-ish, 170, 172 area into play for the move up. Hasn't done that yet. Hasn't done that yet. One of the things I wanted to highlight, though, on both, I hope that was something good. Something just triggered for me. I had a trade going on Amazon, a separate trade on Amazon. But look at both IWM, look at the Qs, and watch which of the moving average it's basically respecting. As you can see here with IWM, it's respecting the 20 and the 8. So what that tells us is basically if we want to plan a trade off of those, look to plan a trade, let's say in this case, halfway in between the 8-day and the 20-day moving average. And that would be a good place to pick up a trade, pick up some shares of IWM or buy some call options. I would say go out, like 90 days out with the anticipation that we're going to continue to run higher on a breakout of 159.50. I would go, a couple of strike prices in the money and just let it run and get it out there about 9 months. And you can actually do a lot of experimenting on how to trade that. The other item, and this one is even better, of course, is QQQ. There we go. Let me get rid of some of this junk here. Now watch what's going on with the Qs here. The Q is definitely respecting both here of late, is respecting the 8 and the 20-day moving average. Get that over there. Come on, get over there. My bandwidth is just, I don't know what's wrong with this. Okay, here of late, look what's happening is basically every time the pullback into the 8-day moving average, price action is ricocheted off it. It's doing it again a little bit today. So that is one of those things you can plan. Just take down whatever the price action, whatever the price of the 8-day moving average is, the 8-day EMA, which is what I use, whatever that is, and just wait for a pullback into it. Or this could just be one of those micro pullbacks that came back and hit it. It's going to rally up higher. Again, this 187.53 is a good level of support, and we'll see if we support there and move higher from here. But again, just plan your trades around the 8. Where would your stop loss be? Well, if you plan it around the 8, your stop loss would be breaking back down through the 20. Just that simple. So that's a couple of trades you can take a look at for utilizing going into next week again. And it's come back and it's touched it multiple times. You know, here since it's came out of this move right here. One of the other things I want to share with you really quick is I want to take a look at TQQ. Get a nice snapshot here of QQQ. That is the ETF for the NASDAQ. Well, the leveraged ETF for that, to the upside, is TQQ. As you can take a look at, with the Qs, it had already broken out past this old high over here. However, not the case with the leveraged ETF. This is one of the drawbacks on trading the leveraged ETF. And one of the reasons why you don't stay in one for more than, I would say, 60 to 90 days is because of what's called backwardation and contango. In the entities that they have to buy to emulate 3 times the move, the leverage move, compared back to in this case, the NASDAQ, the buying and selling of that actually reduces the value. So therefore, it isn't quite the same chart. So oftentimes traders will look to either the Qs or the NASDAQ itself and trade the technicals off of those and let it trigger you into the 3-time leverage TQQ. Again, it's just one of those things, but this really highlights it. I'll just show you one more time, QQQ. QQQ. As you can see, QQQ has already broken out. There you go. Has already broken out. And so, as you can see, it's a much more, from an overall view on the entities, it's a stronger looking chart than the TQQ. And so that's why you want to refer to that. Let me check one thing here. Excuse me just a second. Oh, awesome. Sorry. Oh, awesome. Amazon just broke out through 1940. And so that was good. So here's the 2 entities I want you to keep your eye on going into for potential trade setups going into next week. One of them is Roku. Okay, Roku has earnings coming up here on 5/8. And so there are options that expire 5/10. So you can do an option trade off of this. As you can see, on a weekly chart, we're getting a nice bounce up off of this flag here. Let me show you where that's at. Okay, off of this flag here, we're getting a nice bounce up. Nice bounce up. Well, the other thing what we've had, we bounced off the 100-day moving average, have moved back up above the, and so this has a really strong potential to go all the way up here to 70, or maybe even close to 75, would be an upside target for Roku prior to earnings. And so I would wait until we get some kind of a little pullback back into the 60, let's say back into about $61 for an opportunity to get into Roku or watch it on an intraday chart. But Roku looks really good for an earnings run. Everything is turning around to move back the other way. Another one that's reporting earnings next week has been struggling a little bit. However, it is attempting to make a move. Get rid of this. That drawing. There we go. As you can see, it's fine. Yeah, it's kind of support down here, and this is SQ Square. Needs to react and bounce up, and it has earnings coming up on the 1st. So that's Wednesday. So this may not give us a really great opportunity to get into a trade prior to earnings, and the pre-earning run has been really kind of slack. Okay, Baidu is the last one. Again, Baidu. Okay, Baidu fell out of the sky right here. Dropped the fell out of the sky, but it found some support. Now it has earnings coming up when? Earnings coming up on it's about 5:16 after the market closes, and that is has been verified. And so if this may be setting up, I would go to an intraday chart to get a better trade off of it. Why is this a fairly low risk trade? Is basically we're really close to a stop out. So if we get some kind of retest early next week down in this 165, 164 level, that would give us a potential to a possibility of getting into the trade. So, yeah, okay. Last but not least, Michael, I'm going to unmute you. And I'm going to throw in the EFA.
Okay.
So, okay, EFA. Well, on a EFA on a daily chart, looks like it's basically in a nice little uptrend, Michael. Just did a pullback to the 20-day and is now moving higher.
Yeah, there are lots of similar charts. I mean, where I'm also curious is, I mean, if you look at EWG, that's Germany, as the biggest European market. I mean, they have the big industry companies like the car makers,
yeah,
and chemistry. So
one of the things in looking at this very interesting,
a difficult time with the Chinese trade discussions they're ongoing.
Okay.
But now it seems kind of yeah.
Yeah, this looks pretty good, especially on, like I said, on a daily basis. It's going to and what's I find very interesting is that while the U.S. market has, because this is a turnaround about the same time, 12.17, a little bit, 12.24, just the same time as the U.S. market turned around, didn't quite get as big a boost. And so if the U.S. market tanks, I could see, well, it's one of two things. Either the German market and the European market is going to tank with it, mm-hmm. or that is maybe a choice for people putting their money here to write it up from there.
Yeah, we'll see. And the German companies, most of them had just earnings this week or last week.
Okay.
So that should be that should be done.
So earnings are out of the way.
What I'm also looking on an international basis is AWJ, that's Japan. And I think,
E.
Yeah, sorry, EE, of course. Okay.
Now, are you tracking any China? Oh, that looks very interesting. Are you tracking any China funds?
Yeah, there I have FXI and ASHR. I am almost daily checking, and they had a pullback.
Yeah.
But I think it's
and what was the other one on
ASHR? That's basically the mainland China index, and FXI is the Hong Kong index.
AS what?
HR. There we go.
Okay.
It's
there it is.
Yeah, and it's very liquid, so that's the one you can really touch.
There we go. So there's a little bit of international information for you. Yeah. Well, yeah, that looks kind of interesting. Interesting. So, okay. Well, there you guys go.
If you take a longer look at this, then it looks even awesome. If you go to, can you go to 5 years or so?
Go to what?
5 years or to monthly, or I don't know, just to see what. There you go. What amazing run they had in 2016 or something like this.
Yeah, this is this run here is from 2014 all the way through 2015. So that's one heck of a run. That's a run of over 100%. Let me get a
yeah.
Yeah, about 219%. Not bad.
Well,
okay. Hey, Michael, I've got to respect everybody's time, and I got to get on to my next to the next webinar. Thanks for joining us today. And like I said, drop me an email, and I'll shoot you an email. Just want to see what's been going on with you.
Okay, great. I'll do.
Okay, everybody. That's it.
Thanks for having me. Have a great time. Bye.
Okay, thanks, Michael. Okay, guys, that's it for today. Remember, keep the egg growing, trade wisely, trade profitably. I hope you like those potential stocks setting up for next week and or the ETFs. And if you are a premium member, we'll be up with the final hour here at Moscosh. So again, from my home to yours, aloha, trade well and prosper. Have a great weekend. And mahalo. God bless everybody. Aloha.